This is the Money Hour with your host, Tina Mitchell, on Alternative Talk, AM 1150. Now, back to the show with local mortgage and finance expert, Tina Mitchell.
Welcome back to the Money Hour with your host and mortgage expert, Tina Mitchell, right here on 1150 AM KKNW, the Saturday, July 18th show. I'm committed to providing you knowledge needed to be successful in every area regarding your finances. Knowledge is power, and that's what the show's all about, what you'll receive by listening to the show. If you're hearing my show at a different time or day, you're listening to a rebroadcast. To talk with any of the guests that I have in studio, ask any questions, topic suggestions, give the show a call, 1-855-400-1150. Again, that's 1-855-400-1150 or online at themoneyhour.com. In studio right now, I have Mark Pellegrino with the Rainier Group, and he's going to discuss what's happening in the financial market. Mark, thank you so much for coming back in studio.
Great to be back. Thanks for having me.
So a little background about Mark. Mark is a principal and managing director at the Rainier Group, a boutique financial services firm offering business transition and investment advisory services. Mark manages all aspects of the investment advisory arm of the firm. He has 32 years in the industry, in the investment advisory industry, having played key roles on both the asset management and client management side of the business. So Mark, let's go ahead and start out with what's happening with this. The Greek drama continues to play out, and what's keeping up, what else is keeping up with the days?
Well, I wouldn't say that that's the main thing that's keeping us up at night, but it does look like they have an agreement in place at this point. It still has to be approved by the Greek parliament. We'll see how that goes. They did not approve the last one, so it should be an interesting set of discussions in Athens when that takes place. In the grand scheme of things, Greece is a pretty small economy, and I think the greater impact is the precedent that gets set in the negotiations with Greece, so that when the next European peripheral country that gets into the same place that Greece finds itself, how do they get dealt with? Italy, for instance, has the third largest bond market in the world and is a much bigger economy than Greece. And so how do they get dealt with on the heels of this Greek
kind of how we're
negotiation?
dealing and setting things up for future that could be a more damaging.
Yeah, and actually our greater concern is China. That economy is clearly slowing, and those markets have been trading down pretty dramatically. So that's got our attention more than Greece does right now.
So we talked about some things that might keep you up a little bit at night. What about some positive things or things that you like about what's happening in the market environment right now, Mark? Yeah,
we mostly like the environment we see still. The developed market economies are showing modest but steady growth. Inflation doesn't seem to be a problem virtually anywhere on the globe. Corporate earnings are still strong. The employment and housing sectors are improving. And then when we look at the relative attractiveness of stocks to bonds, it still favors stocks with interest rates continuing to be pretty low. And we especially like the European markets. When earlier this year, the European Central Bank passed a quantitative easing program, much like our Fed did during our recovery. That was really the trigger for better economic data coming out of Europe. So that looks really good to us right now.
So, Mark, we've seen a dramatic decline in the oil prices over the past year. Where do you think that they're headed from here?
We think they're headed lower, actually. And it's a classic supply-demand scenario. Still a lot of oil being produced out there. OPEC has chosen not to cut production. The Saudis, in particular, have very deep pockets and I think are very willing to squeeze the U.S. producers. On the demand side, China's growth is clearly slowing, as I mentioned a moment ago. They are a big consumer of oil. So we think they're headed lower before they head back up again.
So what about your clients, and how does your conversation go with your clients, Mark, in providing returns, expectations that are realistic?
Yeah. So a lot of firms in our business try to be good listeners, ask the right questions, in trying to drive toward an investment strategy. And that's not lost on us. But we believe in combining that exercise, what's called profiling in our business, with the empirical evidence that comes from a couple of models that we built. One of those is a proprietary and sophisticated financial modeling platform. And then we also couple that with a relatively new tool that we've developed called a risk-return matrix, which is a four-factor model that helps us understand the client's required return as well as their desired return, all of that within the proper risk framework.
Yeah, and it's important how we're communicating with our clients so that they do have a realistic expectation to understand what's happening. So last time that you were here with me, Mark, we talked about, or you talked about the idea of decoupling. And is this still present?
It is, but a little bit different at this point. Last year, I talked about the U.S. having been the best house in the global economic neighborhood, and the markets really followed that lead as well. Now, the developed markets overseas, including Europe and Japan, have joined in the fun, mostly on the backs of some stimulus programs that the central banks in those sectors have offered up. So we are actually overweight the U.S. and the developed markets overseas, like Europe and Japan, and choosing to remain underweight the emerging markets of the world. And there are some pockets of strength in the emerging economies and emerging markets. One of those is in the Asia-Pacific region, where we're still seeing some really great growth.
Okay. And we've been in a jobless recovery since the big recession. Do you see improvement in the employment situation, or is real improvement likely to remain elusive?
We've seen some pretty consistent, albeit modest, improvement of late. We did get a weak number late last week on the employment front. I'm not willing to say that 1 week number is the start of a new trend. But the sticking point on the labor front is still that the labor force participation rate is stuck at a very low level, meaning a lot of those who have left the workforce have chosen not to return yet. And I think that's still a bit of a problem in our economy. The rest of the economic data does point to continued improvement, but it's going to be on a slow path still.
Got it. So, Mark, there's been a great deal of buzz about Michael Lewis's book, Flash Boys, and the subject of high-frequency trading. What are your thoughts about Mr. Lewis and what he's offering up?
Well, it certainly helped him sell a lot of books and kept him on the speaking tour at big numbers on a regular basis. Look, there's no doubt that computerized trading has had a meaningful impact on the investment landscape, and in both good and bad ways. It has definitely made it more difficult for the individual investor to compete if they've chosen to go it alone and not hire an investment advisor on their behalf. I guess I'm mostly indignant about these practices because these companies that are doing this are neither taking any risk nor creating any value, and I never think that that's good for the markets.
So, Mark, everybody has their opinion as far as mortgage interest rates, and there's been a lot of conversation with the feds and really what their next move is going to be. I'd like to hear, your thoughts and the path of interest rates and what you think is going to happen.
Sure. Well, we think they're clearly going higher. I'm not sure there's much argument about that out there. Consensus has the Fed starting the hiking cycle in September or maybe December. That's probably fair given the economic environment that's present right now. The Fed's really keen on two things, employment and inflation, and presumably in that order. When they begin hiking, they've telegraphed all along that they're likely to be on a very gradual path. And I think that gradual path will probably be pretty healthy for the market environment out there.
And it's when the feds are making adjustments to rates, it's interesting to see what mortgage rates do, because if the Fed's plan works and they're increasing to slow the economy down, Then when the economy slows down, then mortgage interest rates are actually going to go down because they're getting out of the stock market, vice versa. So it depends on whether it works or not. It doesn't directly have an effect on mortgage interest rates, sometimes opposite, which a lot of consumers don't understand how that works. So it's always interesting to see what happens. So are there any special themes at play in the economy or the markets right now, Mark?
Yeah, we're always looking for macro themes that are playing themselves out on the planet, and or where the markets have created dislocations we think we can exploit. One of those places where we see a burgeoning theme is in the tech biotech sector, where the earnings prospects are still really good. Cancer therapies are moving through the FDA pipeline, and that's really attractive. I mentioned earlier we really like Europe right now with the quantitative easing program that's been put in place. And the precedent there is that the U.S. has already been down that road, and we saw how well the U.S. markets did when QE was in place. The Asia-Pacific region, it looks really good to us, especially the Pacific Tiger countries. And then we like what we see going on in Mexico. They've gone through a regime change. That regime is much more pro-business on a global basis than the previous leadership had been, and it's already resulting in a lot of great economic data coming out of that country now. Yeah,
well, thank you so much for the tips and sharing with my listeners. Now, you've been doing business for a long time, Mark, and you've seen from a number of different lenses. So, what do you think are the hallmark of a great wealth management firm?
Well, first and foremost, I think great firms in our business align their beliefs with their clients' beliefs. And also, I think it's important to have a keen appreciation of both sides of the performance equation, both the opportunity for return, but at an appropriate level of risk. A firm in our business should be willing to be tactical, not just a set it and forget it approach to the portfolio, and shading the portfolio to where the opportunities really reside at any economic point in time, putting their clients' interests first in both managing the assets and also through their service culture. And then I think great firms find really good ways to attract and foster great talent. After all, it is a people business.
Of course. Mark, thank you so much for sharing your expertise with my listeners, and always interesting to hear what's going on in your arena, because definitely affects mine.
Yeah. My
Thank
pleasure.
you so much.
Thanks.
Coming up next on the Money Hour, what is a contingent offer and how do you make it work? Jenica Holmquist with Homes by Jenica Keller Williams Realty right here on 1150 AM KKNW after this short break.